PJ the Wheel Deal coming at you live. It is Wednesday. Woo! Humpback Day, baby. May the 28th, 1:32 p.m. Central Time, Texas time. And we're going to go over some positions in several portfolios. We're going to take our time. We ain't got a whole lot to do. The weather sucks. I wanted to go golf. I'm looking outside right now. Looks like it might be clearing up. So I'll get a weather report from the wife. Maybe I'll cut it short if it looks like there's an opportunity to go golf. And I'm actually going golfing tomorrow with one of our members here. So they're in town and it's going to be fun. I am looking forward to meeting this gentleman, and we will go from there. Yeah, that's what I heard. There's a big old company out there called NVIDIA. Jensen with a cool leather jacket, very charismatic, probably a top 5 CEO without a doubt. And they have earnings, right, today. It's going to be fun. I have a short strangle on NVIDIA. It's real tight, 130, 140, but it's a long ways out. It's like 60, 70 days out. I hope NVIDIA tanks because I would like some shares, but I like them in the 120 range. So I would not mind at all if the 130s came under pressure, managed to trade, take ownership of the shares, and we'll talk about it. We will talk about it. So what I want to do is I want to present, and we're going to start with the spreadsheet because it's more visually appealing, user-friendly. So I'll show you all some moves that I've made, but I want to talk to y'all through the psychology, and then I want to focus on SoFi. Because I went ham on SoFi. We're still team SoFi over here, even though we don't have any actual shares. So what is going on here? So Amazon, we've got the short strangle on Amazon. And it is at 200 and 220. Obviously, just exited some shares of Amazon at 203, which is where we owned them before. And don't really want to own them at 190, at 200. Looking to own them at 190. So again, the straight 15. The money is available to turn this into a covered strangle. So I've been doing a lot of short strangles. I don't want y'all following me into this stuff because you could blow up your account. I'm only doing short strangles because it's sell put, sell calls, wait, right? You sell puts, you wait. That's the old way. You sell the calls, you wait. That's the old way. Well, now I'm selling puts, selling calls, I'm waiting, but then I know that I'm going to have to navigate. And I also know that I could turn this into a covered strangle to eliminate the risk to the upside. Very comfortable with the risk to the downside on all of these underlyings because I've been in all of them before. So again, I'm in that situation. You got to make sure that you have plenty of cash to play this game. If you're going to play it this way, I don't recommend doing short strangles. Covered strangles is the way to go. And ultimately the short strangles turn into covered strangles. And y'all will see that with the Tesla position, moving forward. So Amazon short strangle is out in the distance on purpose because I've got a short strangle that's expiring here pretty soon. So I want everything out in the distance so I can have the money, the focus available for the pound share short strangle that's huge, expiring in like 23 days. In phase, short strangle, where you sell the put. I got it at 40 and at 55, it's slightly in the money. Feel pretty good about it. I need to put this in red so that it lets me know that it's in the money. I wish I could figure out that little formula because this number turns red, but I can't get the letters to turn red. So there's that. So that part's good. Google, another short strangle in the distance, 165, 185, sweet spot trade. I like this one a lot. 150 again. So I'm going to start giving you all targets of where would I like the underlying to go to actually take ownership of the shares. And obviously, if it shoots up, I got to manage it. And then you take ownership of the shares because you don't want to blow up your account. But I'm not excited to take ownership of the shares. There's a big difference. I'll buy the shares, kind of like in the Tesla situation. I'm not excited about the shares that we're buying. It's just I'm doing it to protect the account. But I don't think Tesla is a good deal at the price that it is now. Google, I think that 150 is an exciting deal on Google. Enphase actually feel pretty good at $40. So that one is. I'd be okay, taking ownership at $40 and then just continuing to sell very aggressive covered calls because I want to get the shares called away so I can get back into cash because all of the cash in the account is reserved ultimately for Tesla right now. Amazon 190, the dreams more like 185, 190, and then just ride the shares up a couple, $5 or $10, swing trading, on this account. But I'm using short strangles to build the position. So it's sell put, sell calls, wait, navigate. That's kind of the new philosophy here. Hood, same thing, 55 and 70. Not excited at 55, more like 45. So I'm hoping all of these tank. That way I could be rolling these down the road and then putting strike prices to where this shit actually appeals to me. But Hood at $55, I'm not excited about it. It's at 65 right now, so it's in a nice little sweet spot. It's putting more pressure on the short call than it is on the short put. Then NVIDIA, this is the one that has earnings today, and I've got a very aggressive short strangle on it at 130 and 140. We'll see what happens. I would reluctantly buy these shares because it's 1.3 million, right? So it would suck. 1.36 million. I'd reluctantly do it, but then you bet your ass that I'm going to be selling that to money cover calls, and I want to get out of there. I want to get out of there because NVIDIA doesn't really appeal to me unless it's like in that 120 range or so. And then we'll talk about Palantir. This is why I have everything pushed out to August right now that we've seen so far, because I got a huge short strangle on Palantir. 110 on the short put and 150 on the short call. And there is just enough money, barely, to be able to take ownership of Palantir at 110. I promise you, I have zero interest in taking ownership of Palantir at 110. Maybe 80, more like 70. That is where I would be like, okay, and that's still reluctant. That's still reluctant. Where would I be excited to take ownership at like 50? So that tells you what I feel about the Palantir valuation. And that's why it was a very ideal candidate for a short strangle for me. And everybody's calling them naked short strangles. I get it. But you got to consider that there is the money to turn it into a covered strangle at any time. But it would be absolutely, I would do it reluctantly. I have zero interest in wanting to own Palantir shares at these levels. This is just a cash grab for me. I think that Palantir is going to be range bound in this range right here that you see, 110 to 150. If I end up being wrong, then I would be kind of happy with that. If Palantir came down a little bit, then I would lower the strike price from 110 to like 100, and I would probably keep the high end or the short call at 150, maybe lower that one to 140 as well to help me finance rolling the short put down. So I would just be navigating that little highway there. And I'm hoping that it matriculates down. I know the Palantir community doesn't want to hear that, but that is just my hope. We all mind our own business. We all mind our own portfolios, and we can cheer for whatever we want to cheer for. Palantir gets more exciting for me in that $50, $60, $70 range. But Palantir has been resilient. This stock has been an absolute monster. And I just position myself to make money off of it, even though I absolutely do not agree with the valuation. I think it's totally ahead of its skis. I think there needs to be some sort of correction with Palantir, but that's just what I think. Mr. Market has other ideas. So I'm like, okay, cool. I ain't going to fight with Mr. Market. How can I make money here? So I was willing to put the money on the line, and it stays in this little sweet spot. We pick up a cool $230,000, $240,000 in about 30, 35 days. And whenever we get to the actual portfolio, you'll see that this position is performing extremely well. Then SoFi. Yeah, everybody's, I feel like they're sleeping on SoFi. So I've got a massive short put position, cash secured put, if you will, because again, the money would be there to take ownership of the shares, but I'm going to agree to buy 300,000 shares of SoFi at $12 in the distance. Gotten paid damn near $500,000 for doing it, but because this is a margin account and Tasty Trade does different calculations, I haven't had to park all of that money there. So it's just a real nice rate of return on the investment. And I just have probably, I feel about 95% that I don't have to do anything here. This trade will expire out of the money, make a cool $500,000. But I do have short calls on SoFi at 15 for 620 as well. And I do have the ability to purchase 150,000 shares of SoFi so that I'm covered and I don't have to like just keep rolling and rolling and rolling because I got to avoid assignment like the plague. So I'm not in that situation. So before y'all go out there and start talking shit on the account and everything else, you got to keep in mind the cash balance. But I'm not just gonna like go buy a bunch of shares of these companies when I feel like the prices aren't that great. So I'm only buying the shares when it's necessary, kind of like on Tesla, because we got the biggest short strangle of my career at 300 and at 470. Tesla is right now in a pretty nice little sweet range for me. There's more pressure on the short calls than there is the short puts right now because there's positive call skew and all this other fancy shit. With Tesla, I did take 100 shorts off the table on the call side, and that was a pretty substantial loss because I wanted to offset the substantial gain on TSLL. Now, if we go over here to the open shares, there's not a lot. Actually, this is wrong now. This is 20,000 shares, and it's $324 and some change. So that's a new updated position on the shareholdings. 20,000 shares of Tesla. So how did I get there? How did I get so comfortable with it? Well, if you've been following the channel, at the start of the year, it was STAR, STAR, SoFi, Tesla, Amazon, Riot. There was 6,500 shares of Tesla. There was 150,000 shares of SoFi. There was 150,000 shares of Riot and 10,000 shares of Amazon. So when I started this short strangle on Tesla, the idea was I will bring over the money from Amazon, from Riot, from SoFi, and I can cover about 50, 60, maybe even 70%, depending on how many leaps I'm willing to buy as well on Tesla. And this is kind of where we landed. So all we have now is we have the 20,000 shares of Tesla. And then I do got to add the leaps because I forgot that there's leaps, right? So there's leaps on Tesla, and it's the equivalent of 10,000 shares of Tesla, but it's really, you do 100,000 because it's the price, the average price, average cost, current share price of leaps price was, I'm pulling this information. Hold on, let me go over here. So I paid $95.15. Okay, bear with me, guys. So $95.15. $95.15. So it's going to be equals it's like 951 grand. So that part's off big time. Hold on. So it's not, definitely not 9 million. So I'm doing something wrong there. Hold on one second. Let me take out a zero, perhaps. There we go. That makes sense. It's 10,000. The equivalent of 10,000 shares. It's 100 leaps. And then the current price of the leaps are 93.70. So the current price of the leaps are 93.70. So I go equals see if I can get this right. I think it'll be that one minus this one. It's 145, but that doesn't, I'm doing something wrong here. Hold on. Oh yeah. So current market value equals sum of this guy times this guy. Well, that shit can't be right either. Fuck me. Hold on. Is it 93.7? Bear with me, guys, because I don't fix this now. This is going to annoy the living shit out of me. So obviously I got something off here on the decimal. Oh, because it's per share. So I wonder if it's 0.93. Is that what it is? There you go. That's closer, but it's 0.937, I think. Or something like that. Let me look over here. What is this leaps value? No, it says it's 936. I don't know. I'll have to figure that shit out. I'll have to figure that out. So anyway, and then this is obviously just for, so then this would be equals sum, and then this guy minus this guy. That makes sense. That's close enough. So making money on the calls, losing money on the leaps, and then this is equals sum of these two guys. There we go. Something like that. So anyway, let me check in with you guys, and then I will stop the screen over here. Let me get it to where we can share the portfolio. Y'all should see kaleidoscope action. And then we'll go over here. Okay, so it's set up, ready to go, but let me see if there's any live Q&A that we can do in the interim. Hey, TJ, not $1 funny. Afternoon market's not bad today. Hope late night wheelers was good. Too late for me. Are you doing any covered calls before NVIDIA earnings? I just went over the position on NVIDIA. 7 like afternoon. It never rains on the golf course, right? It doesn't matter what the weather is out there. If the golf course is open, there's always somebody out there. I find it pretty amazing, actually. How are you doing on the diet and training? Not bad. Back on track. I went to Philadelphia, and it was just an absolute beautiful place to eat. I gained almost 12 pounds, and I've since lost 5 of those pounds. So I feel like I'm kind of getting back on track to a certain degree. Just had a fish taco, and I had a fourth of this big red, and I feel like throwing up. It's like I could just like taste this sugar. So I want to just keep drinking water, and it's boring, but it's working. Selling the Stata Collector. Selling the 919.25 NVIDIA 124 put for $750. 95 historic win rate, taking profit at 17. Cool, taking shares. I mean, that sounds pretty decent, actually. That sounds really, really good. That sounds like a great trade. Be sure the shares are straight price select. Smart trading, brother. No, Palantir is never going to 50. Hey, it's free to dream. You know, I always say God's capable of anything. So if you're going to dream big. Don't bother around with little shit. I bought back half my NVIDIA 125 cash secure puts for June today going into earnings. So I guess the theory is you think that it could go down. Do you really think that NVIDIA is not going to crush it today? I'm just curious because I feel like 125 is pretty decent entry point. I mean, it wouldn't be the worst thing unless you don't want to own the shares, and that's for it too. See too many people cry when their call strikes get breached. Imagine if he bought TSLL with that instead of Tesla. Wow, yummy. I made over $1 million with TSLL, so I think we're good. Just locked in another $400,000 today. It's just a swing trade, though. Like TSLL is not. I'm going to say this 1,000 times for the people in the back of the class. They're a little bit slow. TSLL is not designed to be held long term. So you find your little spots. I got in 100,000 shares at 1084. I got out of there at 640. lost about $40,000 in premiums along the way trying to sell covered calls. Shit didn't work out. So I was happy with that. Do I think it could go to 20? Do I think it could go to 25? Possibly. I also know that if Tesla's flat for a week or two, this shit's going to go back down to 14. I wasn't willing to do that. So if it goes back down to 14, I'll get back in there. Probably do a short strangle the minute that it starts pushing up. I'll cover it and then try to ride it up another $3 or $4. And I'm just going to try to play this game on TSLL. Just so y'all know what the ratios are, right? Because it's weighted compared to Tesla. So 10,000 or 100,000 shares of TSLL is the equivalent of about 8,500 shares of Tesla. So the reason that I had the TSLL on to begin with was for protection on the TSL short calls, like for protection. Because I was like, with the TSLO shares, there's no time decay there, right? As opposed to just buying leaps. So that's why I was excited about it. And the cover call premiums were pretty good. But then whenever I looked and I was like, you're up like $500,000 here, $400,000 on these actual shares. You want to really ride it back up. If Tesla gets to like 380, 400, and then it comes crashing back down to like 310, 320, because it's got to fill some gaps or whatever the hell it may be. Or people realize that, hey, maybe we got a little ahead of ourselves here because they rolled out 10 fucking taxis. 10 that aren't going to do any revenue whatsoever, so I mean, like at some point reality could potentially set in because there's a lot of euphoria, but euphoria only takes you so far. At some point valuations matter, right? That's why I have the short strangle to begin with, because I think that Tesla is going to be going real crazy up, down, up and down. But I think at the end of the day, it's going to be going up, but it's not going to be just like straight up, because people are going to realize that the PE ratios start getting kind of crazy. Again, that's my bet. That's what makes a market. I'm not saying I'm right. That's my bet. That's my thesis. I never claim to be right until I lock in the win. Like on TSLL, I was right for me. Now people are going to be like, oh, well, you could have made an extra million, an extra 2 million. Well, show me the 500,000 you made, or not. Shut the fuck up, right? That's the way that I think. So not to be real aggressive with y'all, but that's just the way that it is. It's like everybody has their ideas and stuff, but very few people post their trades. And there isn't a channel like mine out there. I wouldn't have my channel, guys. The reason that I created this channel is because I created what I was looking for. I couldn't find somebody that would trade on a daily basis, show the plays, and it was like you could just like check into school as a student, right? And be like, oh, I like that trade. Oh, I like that idea. I like this and that, so you have like something that's like every day, or now I'm only like 2 or 3 days a week, but like something that you could use as it's kind of like everybody shows up in class and it's an open book forum and we all just talk about what we're doing, how we're trying to navigate the market and so on and stuff. This guy is rich, but man, what a dick. Investing with Jeremy's a dick. Anyway, can also use a formula to update the current value. Come to TJ. I want to invest with Henry to come in here, and I'm going to put his portfolio on the screen. I'm going to roast his ass. Why are you such a bad premium on SoFi? I don't know. Man, was it data-driven investing? There was one of these freaking way smarter people than me that did a post on it, but like steadily over like the last year or so, the IVs just like totally dried down. Like it's totally dried down on SoFi, which has been extremely, extremely disappointing for me, because this has been like my go-to move for 3 years or so. Yeah, because I was in SoFi since it was IPOE. I guess it's like the whole SPAC craze. By the way, I'm totally messing with, who was his name? Invest with German. I'm totally messing with you. Why is there such a bad premium? So I did that one. It's raining in Houston, Texas. Dude, Houston, it rains a lot over there, right? My wife's interested in living over there. I'm just not. I don't like the traffic, man. I just think it's just too much. After TJ, glad to have you back. Market waiting on NVIDIA earnings. I bet, man. I bet it's exciting. I mean, I feel like NVIDIA has propped up this market for the last couple of years. It's just been absolutely insane. I think I saw it. I'm not sure if it was Sellers. Jonathan Sellers. Was he on here selling with Sellers? Yeah, this gentleman right here, super smart dude. He posts on X all the time. He said something like, I feel like I read something. I'm not sure if it was him, but something like they're expecting something with DeepSeek to potentially throw a monkey wrench in this whole program again with NVIDIA. What are y'all's thoughts on that? I mean, do y'all think that NVIDIA like legit has a stronghold on this market? I feel they do, but I mean, are all these companies and countries just kind of like sitting on their hands and not doing anything about it? Or is somebody going to try to get a piece of that pie? Any luck getting your man on Riot to come on YouTube to discuss future plans? I haven't reached out. He's at the conference right now. He's at the Bitcoin conference. So maybe after they get settled down with that, I would definitely try to get Jason Les back on the channel for sure. Everyone thinks Tesla has run because of robotaxi. No one cares about that. It's about the bots. The bots are coming soon. I think that's all fair, possibly. I'm just one of those that, read the Benjamin Graham book, and I believe that the valuations matter and the robots and all that stuff's fine and dandy, but like, how much does it really add to the bottom line? And then we still have, at the end of the day, we are declining everything right on Tesla right now. So except the energy business, I think the energy business is amazing, but I don't know. We'll see. Would you recommend a single 40-year-old living in Austin, Texas versus Miami, Florida? I guess it just depends your vibe, right? I think Miami's amazing. Austin is my favorite city in Texas, but I'm also extremely biased because I graduated from the University of Texas in Austin. It's an awesome vibe. It's highly liberal, so you got to be okay with all the alternatives, lifestyles, and all that stuff, because it's going to be like all over your face. It's like mini San Francisco type thing. So there's that vibe. They're extremely health conscious in Austin. So you see like a lot of people walking, jogging, exercising in general. It's got a real cool vibe. It's extremely progressive. I don't know. There's a lot of smart folks in Austin, so you can have conversations about anything and everything. I think that a big percentage of the population smokes dope, and so their brains are like, I guess everything's opened up over there, and they have like these off the wall ideas. That's pretty awesome. Is your conviction in Riot still? Oh man, I lost it. Here we go. Is your conviction on Riot or in Riot is on Riot? Sure. Still as high as it was at the beginning of the year? I think it's probably higher. Because whenever we went to go visit the facilities, it was pretty obvious to me, the infrastructure that I've been reading about and seeing on the internet for a couple of years, 3 or 4 years. Like, it was all there. Like, it was all real. And I do think that this whole data center, artificial intelligence, high performance compute, whatever, all that stuff is real as they claim to be. I think that Riot's going to get a pretty legit dance partner. So they're going to have that whole different revenue stream that's going to be able to fund the Bitcoin operation. So I really like their hybrid approach. But I do think that Riot may potentially have backed themselves into a corner to where they're going to have to deliver this dance partner, right? They're going to have to deliver this hyperscaler. And if they're not able to do so in a semi-timely fashion, I don't know if the stock market's going to like that too much. And I have a conversation later today with Tasty. We're going to try to work on these fees and stuff. So Riot will definitely be a big part of the portfolio going forward. CleanSpark's been shit, man. If I look at the last year and a half, I've probably made more money on CleanSpark than Riot as well. And what I love about CleanSpark is it's a pure play miner. So they're trying to mine it for 50, 60,000, whatever the numbers are. Because I don't follow it as closely. There's a guy, Rex Finance, who I think that's his baby. Like, he follows it a lot. And then Sebastian seems to be pretty bullish on it as well. Another YouTuber. He's the guy with the real cool spreadsheets on all the miners. CleanSpark's efficient. And they did the whole convertible note thing as well. But instead of using the money to buy Bitcoin, they used it to like shore up their entire operations. And they're like, okay, we're betting on us, and we're gonna go mine the crap out of this Bitcoin, and then we're gonna grow. We're gonna grow our hodl and get really efficient, just get better at what we do. And we feel like we have enough levers that we can pull to keep financing operations, sell some Bitcoin as we need to help fund operations, and y'all don't have to worry about dilution for the foreseeable future. I think something in the mid-20s, lower to mid-20s, is where they're targeting, to where they would need to potentially dilute again. And I think that bodes very well for CleanSpark long term, because I think there's two main reasons, or one main reason really, that's led to another reason as to why the miners just haven't pumped. One, the floats are a lot bigger this go around. And the reason is because dilution, because I feel like the majority of the miners, and not all of them, they were like, dilution is a solution, right? That's the lever that we're going to pull. We're going to dilute the market with shares, the shareholders with more shares, so they own a smaller piece of the pie. We're going to raise capital, and sometimes they didn't pick the best time to do the at the monies. Treating us like an ATM, if you will, right? ATM at the money, but it's really like an ATM for, using your shareholders, diluting your shareholders. So I think it created a lot of distrust or mistrust, whatever the right word is. There's a lot of investors that just got tired of it. So I think it's going to be real hard for these miners to really pump, because they're going to have to win over the market again. I just think that the sentiment on the miners is extremely low across the board, because people are like, well, there's other places that I can get better alpha and not have to deal with as much dilution. Or they go over the micro strategy play and they understand that whole MNAV thing, whatever the hell, which I don't really get. I haven't tried to get. I've looked at MicroStrategy a lot, and I'm like, this just feels like a Ponzi scheme. So when I don't get something, it's just not clicking in my brain. I put it in my too hard pile and I move on. I don't have to be in every stock. So we'll see. Good day, Wheelers, Tesla, and MSTR focused here. Right on. Dang. Would you do any calls right now? I haven't done it, so wonder what you would do. I probably would, and it probably wouldn't work out. I do not have a good history of selling covered calls into earnings. It's a nice hedge, though, if you're planning on holding that instrument long term. Obviously, you're super smart. I believe Jonathan is this gentleman's name, that these instruments, they suffer from NAV erosion, net asset value erosion. They suffer from not being able to accurately mirror, right? Like there's tracking errors there. There's something called volatility drag as well. So they're just not designed as long-term instruments. And depending on how profitable you are already on those trades, it's tough. Me, I would do it. What would be wise? Probably not doing it, or maybe like on half. I don't know. Not financial advice, right? Like it says on the bottom. Hey, what's going on, Stockman Mark? Yeah, do it. I love Daniel Garrett. He's a gambler too. There you go. NVDO erodes, my friend. If there is a big dip or sideways movement in NVDO, you're going to be down significantly. Why not sell calls way out? What's the worst can happen? You cash out big. This is true. Yeah, let me some CleanSpark week after week pays the bills. Yeah, CleanSpark's been a money printer. What's up, TJ? Currently holding GIS. It's the best stock. Every stock that you get in, my man, is the best stock. It used to be American Eagle. I followed this kid's journey. As American Eagle, there was Novo Nordisk, however you say it, and that GLP-1 company. They do other stuff, but specifically GLP-1. And then now it's this one. And I haven't been on Twitter as much, but I think I did see screenshots that you're doing real well with this one. I know that the other one was not working out well for you. Hopefully it ended up working out for you. I cheer for everybody here, guys. I'm that guy. Like, I want everybody to win. I think there's plenty for everybody to eat. You don't need to be wishing ill on anyone in the finance space. I agree with your analysis on CleanSpark 1,000%. Slept well at night wheeling this one. Link class for a wheel. I have more Riot good chains also. Thanks, bro. Love you, bro. Hope to talk to you soon one day. Yeah, for sure. Love to have you on the channel. Are you ever going to go on a Myth show again? Real good question. Probably not for a while. I messaged Amit and I was like, hey, I'd like to talk about the Palantir short strangle And he said, hey, there's a lot of newbies that watch my channel, and you kind of graduated into more advanced wheeling, if you will. So that really isn't something that he's super comfortable showing on the channel, because the last thing that we ever want to do is lead somebody down the path of their financial ruin, because I'm starting everything with the short string, right? But with the idea that I'm going to turn it into a covered strangle the minute that there's pressure. Obviously, not every position is going to be as big as Tesla, so Tesla's a pain in the ass. I'm able to just cover that position right away, unless I just wanted to buy like 200 long calls and call life good. I could do that, a couple $1 million though. So there's that. So it takes away a lot of my options to be able to do other stuff in the interim. So I'd rather just collect some of that data decay, because it's a lot. It's like 14, 15 grand a day just on Tesla alone, all things being equal. So that's good money that comes off the clock on a daily basis, right? So it's just one of those things. It's just one of those things. Here we go. I sold NVO for 600 profit. Right on. Good for you, man. Good for you. So yeah, so I'm not sure if that's going to happen, because it might be irresponsible for Amit to feature me on his channel, given that I'm no longer just selling cash secure put, waiting it out. When the shares sell cover call, wait it out. I'm not doing that anymore. Like, I'm trying to make money faster. And, it's like, if I'm willing to own these shares, let me sell the strangle. It dips, hoping that everything that I'm in dips. I'm that weirdo. Like, I'd rather get stocks cheaper than more expensive. I'm like, well, I'll just own the shares, and I just get collected 1 free month of cover call premium, right? Or naked call premium, if you will. And then you're back in a coverage strength where you can call life good. Maybe one of your students can do a Mint's channel to show basics. I've been with you since last year, improve my skills. So I know it works. I'll take a peek. Thanks, bro. Completely understand that. As a less than year options trader, all I do is cover calls, sell puts, enjoy the part or your part. The other stuff seems super complicated to me. That's fair. Everyone talks about the erosion, but I find I make up that is my philosophy as well. And over the weekend, we had the long weekend, right? So I started screenshotting. It's like, I feel like I discovered Grok over the weekend in ChatGPT, because I don't really use these often for what I do. So I started screenshotting, and what say you, Grok? So it would give me like a bunch of scenarios. I actually printed one out. This is me giving Grok a bunch of information, and it's spitting back, scenario A, B, C, recommendations, etc. Right? Not financial advice from Grok. And it definitely recommended see profit, take profit, since I'm in the underlying. I don't know if selling with seller is in the underlying, meaning NVIDIA, like in the real underlying versus the ETF that tracks it. So because I was in that short call position, the short strangle position with NVIDIA, not fully covered at the time, I only had 6,500 shares. Show the entire portfolio to my buddy that's got $100 million playing the same game. And then I showed all the screenshots to Grok and started formulating the game plan. I'm way more comfortable with shares. Obviously, shares are a lot more expensive. Shares don't expire. So that's how I landed on the 20,000 shares and the 100 leaps. And then I cut down from 635 to 535 on the short calls. So it matches the short puts. And I'm just going to stay put there for a while. I feel comfortable. And as I start winning more trades, like the Palantir trade that I'll show here in a second, I just feel like I'll be able to fund more shares. I'm gonna try to buy more shares in Tesla versus leaps, but I also am not going to be opposed if I see a technical breakdown or something. There's like 4 or 5 YouTube channels that I watch, people that do technicals on Tesla on a daily basis. I do them myself. I don't feel like I'm a technical expert by no stretch. There's a lot of people that are much better at it than I am, but I can catch certain little things. I'm not going to be afraid to dump those freaking shares for a nice little profit and then just keep, spreading the wings. And eventually I like to be about 300, 350 wide. Right now I'm at 300 and 470, so that's 170 wide. I like to be at about 300, 350 wide because I think ultimately that's what it would take on a stock like Tesla to make it all the way to the finish line. I messed up. I was planning on selling puts on Nvidia before earnings and actually bought the put. I was planning to sell, and I just noticed it was already down like 10%. And I've done that a couple of times. It's super annoying. Yeah, but no one is talking about this but you and I. I'm telling you. Selling it, seller doing the same with Soxo instead of going to move away from Soxo in the future due to difficult prediction of movement. Yeah, I think the market will crash is so overvalued. What do you think? I think the market is just as strong or weak as the next Trump tweet, right? I feel like we're all at the mercy of Trump tweets. Like I feel like for the next couple of years, we don't have to be listening to earnings calls. We don't have to be doing anything else. You need to follow him. Probably get a what's it called? True Social. Probably get the True Social account. Follow Trump. I think it's at Real Donald Trump on X. Follow him, and I think that's what's going to move the needle. There was the it's called, is it a meme or what is it? I think it's a meme, right? Where he was holding the little deal. Your technical analysis is no match for my tweets or something like that. I feel like that's the market that we're in. It's a freaking yo-yo market, man. It's crazy. Markets always go up and to the right long term, always thinking that there's some crash coming to full scale. You'll miss the boat 100 times. That's fair too. Depends on the king of texts. Back, sleepy Biden. I've done that a few times. Bought puts instead of sold calls. Yeah, for sure. We've all done it, man. We've all done it. So anyway, let's get into the actual portfolio because I could be losing millions of dollars here talking to y'all because I haven't looked at the portfolio. So let's see what's going on. So let me get over here. There we go. So it looks like there's definitely a little bit of a pullback across the board. So we'll start from top to the bottom. So this is 47. So that's I got a little thing here that helps keep me straight. So 47. So that's my son's account. So what's going on with that one? So there is 3 positions. There's 1,000 shares of NEO. My son really, really likes NEO. So we have it in here. We'll see what happens. I'm a huge fan of the car, the way they run the business. I feel like they got to really focus on profitability at some point. If not, I just feel like mathematically they run out of money. They're going to always have to dilute. It's almost like the miners, but for EV. The Riot, there's 3,000 shares of Riot. Somebody was asking about conviction, so there's still conviction there. There's 3,000 shares of Riot at 689, and the covered calls are at 950. And y'all will see this is all covered. I don't do any just short strangles on this particular account because there's just not enough cash. There's not enough cash to get out of any types of binds. I'm not going to commit to buying shares if we don't have the money to do so. I'm not going to commit to buying or selling shares if we don't have the shares already. So I play this account totally differently. And then TSLL, there's 1,500 shares of TSLL. And then I got the call at 1,750 for this Friday. There is money, there's a little bit of money, $18,000 in buying power. So I could potentially, on both of these, I could potentially put some puts on as well. I put some puts. I could sell some short puts as well, and it probably wouldn't take up a lot of collateral. Let me look at doing that real quick, especially on a nice red day like today on Riot. This is actually probably be pretty ideal. So let me look at Riot here, but this is for 2 days out, so I don't know that would do much. Yeah, I'd have to be like right at the money. What's Riot at? Like 850? What's Riot at? 840? Yeah, so that wouldn't really do much either. So I have to wait for these to expire, and then on the next round, I could potentially throw a covered strangle out there. I don't know that I'd be able to do it on all of it. I don't know if the buying power would support that. I guess I could test it out. I could test it out real quick. So if I just go here, see what that looks like. And it's 30 contracts. Let's see what Tasty says. Yeah, you see that would eat that. I don't have enough for all that. I wouldn't be able to do that. And have to minimize the position on TSLL. That one's interesting. I got the calls at 1750. I could potentially do, I don't know that that'd be enough either, though. I could maybe do like 10. I could do like 10 puts at like, say, 15. Wonder if I'd be able to do 10. Would it support that? Yeah, it would suck up a lot of the buying power. It would suck up a lot of the buying power, but pick up another $198. Not bad, That's something to consider. That's something to consider. But I'm a lot more conservative with this particular account. And then I feel like I wouldn't really be that excited to own 1,500 more shares at that level. We got the 1,500 at 885. I wouldn't be excited to pick up another 1,500 shares in the $1,500 level personally. So this account's doing pretty well. Initially, I had screwed the pooch on TSLL because I had just bought leaps on SoFi. And that's why I did. This brings me to the screenshot. What happened with the dogs, baby? Somebody's at the door or something because the dogs are going crazy. Sorry about that, guys. So one thing that I've considered, I was going to talk it over with my son if he ever answers my phone call, is I was thinking about trying to get these shares called away, Riot and TSLL, and letting the Neo situation play out. I could lower this covered call over here to like $4 or whatever, even bring in a little bit more money, but eventually get back into cash. The portfolio's positive all the way around. And then what if we started all over again with SoFi and did long calls on SoFi and try to get to that 6-figure mark just by doing that, and then running a poor man cover call campaign on SoFi. Because right now the IB ranks at 10, so this is an ideal stock to buy leaps on. Like, I don't think that I've seen a more ideal situation where I feel like this thing's got a double in it easily within the next 12 months. And the IB is pretty low. So this is like an ideal situation to buy some leaps. So anyways, somebody was saying like, oh, the IB's tanked on SoFi. That was a conversation earlier. So that's a real good opportunity to buy leaps, in my opinion, right? In my opinion. So, what say you guys? Let's move over. We got account ending in 33. More of the same, guys. So there's Neo. There's a short strangle there. It looks like the short puts are in the money. PayPal, this is a covered strangle with the agreement to buy more shares at 70. So the existing shares at 75. Feel pretty good about that one. 51 days out. Riot, this is, there's 50 puts. And then there's a short strangle over here to 11 and 12, 51 days out. This other one expires at 23. That one's out of the money. So this one's doing okay. And then Soxel, there's 1,000 shares owned. And there's 10 covered calls that are in the money. And then there's also a short strangle out in the distance at 15 and 20. So there's a nice little sweet spot there. And then TSLL, there's 3,000 shares owned. And then there's a larger short strangle going on at 12 and 20 way down the road. So we'll see. You're just kind of keeping an eye on those. Then we'll skip this account. This one's brand new. And then we'll go over here at the account number 20. More of the same. There's CleanSpark. It's a short strangle, 9 and 14. So obviously it's doing pretty well. The $9 puts are getting challenged a little bit, but this is way in the distance. I feel like by the time we get closer to expiration, the $14 calls are going to be getting challenged, but we won't let it get to that point. We'll buy the shares, turn it into a covered strangle. There's quite a bit of cash there in the account, $564,000 in cash. So again, you got to look at the context of everything. You can't just look at the trades and draw conclusions. You have to look at, hey, do they have the money to buy the shares or not? And, because it's sell the put, sell the call, wait, navigate. You know what I mean? So we're just waiting, and then we'll navigate accordingly. So here's a short strangle on Marathon, 16 and 18, 30 days out. Obviously in the money, and there's obviously money to just buy the shares. We don't have to keep rolling and rolling and rolling. We just take ownership of the shares at 16. So cover calls at 16, make a shitload of premium, and Marathon goes up above 16, and we don't want to keep rolling. We don't have to. We just deliver the shares for the same price that we bought them, call life good, move on to the next trade. Riot, there's 5,000 shares owned, and then there's a short strangle going on with 100 puts and 100 calls. So this one's only half covered. This makes some sense to potentially go ahead and cover this position already and have 10,000 shares. Then now you have no risk to the upside because it would be fully covered over there. And then we'll just be managing the short put side at 8. Maybe then I'll start rolling that one as we get closer, because obviously there's 114 days to expiration, so there's nothing to worry about here. But 847, I feel like this is probably pretty close to the bottom on right now. So I think that wouldn't be a horrible thing to just scoop up another 5,000 shares there, and then down the road manage these to like 7, 6 if we needed to, and then take ownership of another 10,000 shares down there. I think we could manufacture the win. SoFi, there's a big situation going on here. There's actually leaps on this one. These leaps are doing okay at $15, and then there is 400 short puts in the distance at $10. Those are doing okay, and then we're selling calls against these positions here, and those are doing pretty good at $16, expiring 23 days from now. And then TSLL, there's 5,000 shares owned. Again, it's very similar to the Riot situation, where it's like half covered, if you will, to the upside. So it's 100 puts at 8, 100 calls at 18, and there's already 5,000 shares owned. There's plenty of cash. We're just not trying to own too many shares. Now let's go to the featured account, and it's going to be exactly what I showed you guys, 200 and 220. We're doing okay there. Enphase 40 and 55, we're doing okay there. Google 165 and 185, we're in the sweet spot. Hood 55 and 70, this is a position that I'm in, but I don't have to be in it. I have a lot of conviction in the company, but it doesn't have to be in the portfolio. More than likely, once I end this, and because I have a call here right at 3 o'clock, this will easily be replaced by Riot or CleanSpark. I just feel like the double would happen over there than it would on Hood at these levels. And I know there's S&P inclusion and all that other shit in a month or two. It's whatever. It's just one of those things that doesn't have to be in my portfolio. NVIDIA 130 and 140. I feel all the pressures to the upside here. I totally see this one being a pain in the ass, and I'm gonna have to reluctantly buy those damn shares or turn this into a call credit spread on this side. So that part sucks. Palantir, this is just the trade. This is the best trade that I've made in a while. I feel I saw an opportunity there. I follow the company extremely closely. I watch Palantir weekly. Been watching that show for a couple of 2 or 3 years now. And then I study the charts. Any piece, news item, anything that comes out of Palantir, I'm interested because I like the company and everything that they stand for. I just think that's the company. I'm talking about the stock now. The stock's overvalued by a mile. So I was like, but the market wants to keep it there because Mr. Market loves this stock. Retail loves this stock. And now, the institutional investors are getting in there and they're like, we're going to go make money with this stock too. So I put it at 110 and 150, sweet spot trade, 23 days out, already up 33.5%. And I don't have any interest in taking this trade off. I want to milk it. I'm not a big fan of writing shit out to expiration, but I can see myself writing this out to expiration. And then on the next round, opening it up instead of 110, maybe 100, keep it at 150. So now instead of 40 wide on the next one, I'm at 50 wide, and I'll probably keep it at 500 contracts. And I mean, this brought in, guys, this is, $230 some $1,000 in premiums, and, already up 77,000 on it. I just feel like this trade is going to really work out, and I'll be real happy whenever I'm at like $80 on the put and I'm 140, 150 on the call, and I can, do this cycle 4, 5, 6, 7 times. It might take a year to get to $80 on the put side. So I won't be collecting as much on a monthly basis, but I'll feel a lot more comfortable. And then at that point, that's whenever this thing's going to start looking like Tesla, and it's going to have like 1,000 contracts or something ridiculous. But by that time, more monies will have been injected into the account, so we'll be okay. And we got to keep everything in context, guys. There's $8.8 million in brokerage cash there, so there's opportunities. There's money that is available to take ownership of these shares, even if it's for a short time, just to take all the pressure off the account if there's a moonshot going on. SoFi, 15 short calls, or 1,500 short calls at 15, 23 days out. It's doing okay, up 48%. And then I've gone absolutely ham on the short puts, 3,000 contracts in the distance. You can see there that there's a lot of money hanging in the balance, up 15% already. I feel pretty dang good about that position. And then this is the Tesla one that's been posted everywhere, the 20,000 shares, the short strangle, the 300 and 470, so it's 170 wide for 233. It was 535 and 635. Now it's balanced. I took 100 off the table, and then there's 100 long calls as well. So got the protection to the upside on the 20,000 shares and the 100 calls. And then, so obviously if there's a moonshot, I still got to deal with the fact that 30, or, this is the equivalent of 30,000 shares, and this is being short 53,500 shares. So there's a gap there. So there would still be some work to do. I have to buy more shares. Bottom line is I'd have to buy more shares. How much more? A lot. 23,500 shares more. So that part sucks. Or I'd have to buy some more leaps. The leaps are obviously cheaper than the shares, but I'm in the business of collecting premium, not paying for premium. So that is kind of like a last resort scenario. I could see a world where I buy 100 more leaps and that's it. After that, I would just like to cover the position with shares and, kind of go from there. But we're up a lot on the shares right now. I don't see me wanting to ride those shares back down to like 300 or something like that. So there's going to be a world where these shares would no longer exist. I would lock in the profit, and the only thing that you would see is the short strangle along with the long call as well. So that's kind of what I'm working towards there. So anyway, let me check in with you guys. That is all that I have as far as the portfolio goes today. Where are we at here? Ham's cup and handle. Appreciate you, Brian. What's that leap on SoFi you were just talking about? So to me, if I was going to buy leaps on SoFi right now, I'd buy them slightly out of the money, probably looking at the 15 handle, June 2026, line up with Nodo. I recently did this trade, like probably 60 days ago, maybe 75 days ago, when SoFi had dipped in that $12 range, and I made about $400,000 or so. That's one that I'm considering doing again, but I kind of got my hands full with Tesla right now. So instead of paying money to buy leaps, I just opted to double the short puts that I had. So from 1,500 contracts, I did 3,000 contracts. The problem with selling puts right now on SoFi is the IV is really, really low. So the IV spikes, I could be losing money on that trade, even though it's out of the money. It's still out of the money. Like theoretically, SoFi could go up a little bit, but the IV spikes a lot, and I could still be losing money on that trade. But the only thing that will help me is theta decay, but it's not really going to help me for a while because it's 230 days out, right? So you got to understand all the gimmies and the gotchas. If you're comfortable buying leaps, again, it's not financial advice. I'm not telling you what to do. I'm just telling you what I would do and what I'll likely do in other accounts is buying $15 leaps on SoFi for June. I think those end up printing in a pretty big way because I don't see a world where SoFi is not $25 by then because I think Anthony Noto going to get paid. Like he ain't doing this thing out of the goodness of his heart. He wants to get paid. So that's me buying $20 leaps on red days when I can average down right on. Hey TJ, so I have SoFi 127, 12 leaps. Average cost is $690, so I'm down. Are you thinking this is a good double up spot? Not financial advice, but it wouldn't be the worst thing. What's your price target on Riot? I definitely think Riot will announce a partnership by the end of the year. And they're getting better at mining Bitcoin. So I definitely think that Riot will see between 15 and 1750 by the end of the year. And I think that Bitcoin ain't done, right? Especially right now. There's going to be all the rah-rah and the hoopla, with the Bitcoin conference and stuff. So yeah, I think Bitcoin's here to stay. The miners aren't going anywhere. Riot, CleanSpark, they have pretty good balance sheets, for being smaller companies, guys. So they're definitely not going to go out of business anytime soon. Why widen the spread? Isn't it best to keep it tighter for more premiums? You were comfortable anyways. Absolutely. The issue is I'm not comfortable with the put, and I'm looking for less management. So I'd be more comfortable at 100, and it was at 100, but I got greedy. So I'd be more comfortable at 100, 150, and if that's 200,000 in 30 days as opposed to 230,000, that 30,000 for my peace of mind is totally worth it. And I'm hoping that count your inches down a little bit, say to 115 even, and then now I could be sitting at a 90. And instead of 150, 140, I'm a lot more comfortable there. And I'm not necessarily a lot wider. It's just I want the lanes constructed the way that I'm comfortable. And 110 is not comfortable. Everybody thinks you should be worried about the 150. I have zero worries on the 150. My issue is I don't want to have to keep rolling this 110 put because I feel like I should have been at 190 all along, if that makes sense. So I'll just be kind of annoyed at myself because I feel like I knew better. What's your advice on successful marriage? Happy wife, happy life. Your wife got to be your best friend, your confidant. She's your partner. You're not in competition with her. And live to please her. Live to please her, and she'll please you. It's in the book of Ephesians. It's husbands are commanded to love their wives the way that Jesus loved the church, and he gave himself up for her. So your job is to bring her up, right? Not to get all spiritual and philosophical and all that stuff with you guys, but it's all about the peace of marriage, right? As a husband, you're supposed to be the priest, the prophet, the provider, the protector. If you can't do those things, you shouldn't fucking get married. I'm going to say it again. You're supposed to be the priest, the prophet, the provider, the protector. If you can't do those things for your wife, you shouldn't fucking get married. You're not marriage material. Everybody wants a Proverbs 31 woman. Why don't you become a Proverbs 31 man, if that makes sense? Be the type of man that the woman is going to want to cling to and to cleave, because y'all are designed to leave and cleave, right? You have to leave your family and cleave to you. So that's the thing, that's the thing. If you cannot live to please your wife because you want to please the world, you're not ready to be married. You're not ready to be married. Whenever you get married, you die. Your single life dies. Her single life dies. Y'all get joined. And y'all are reborn as one being. So whatever she needs, whatever she wants, she gets. Whatever I need, whatever I want, if she's able to deliver it for me, I'm going to get it. And that's what marriage is in a nutshell. You live for each other. You don't live for the outside world. You guys are a team, and it's you before anybody else. I'll leave you guys with that. TJ the Will Deal signing off. As always, may your sky stay blue, stock screen. Peace out. God bless you guys.